Hey everybody, welcome. It is Mark Coe for the 17th of May. Wanted to take a look at a couple markets here and talk about some of the model trades I have on for the daily model, the trend following model. We entered these trades last week and wanted to take a look at them kind of up to date and how they're performing. So the first one was dollar CAD. Sold dollar CAD on an uptick. So this model basically is coming in and saying, hey guys, we're going to start a downtrend. We want to sell dollar CAD. We want to look for Canadian strength. We want to look for dollar weakness. And the point where the model did it was 37.37. So it wasn't an instant reaction. It was was it the 8th of May? The 8th of May, 9th of May. Let me see what day that model triggered. Dollar CAD triggered the 8th of May. That's what I thought. 8th of May, dollar CAD triggers a short signal at 37.37. So I'm highlighting the level, and you can see how this works. So this is a daily model. It's not something that updates every couple minutes. It's not a day trading approach. It's something that's longer term in nature, but by all means a very good reference point for both the short or the longer term trader. So here's an idea of a trade we instituted last week. We had this open session preview of our model and of our class, and so we had a lot of people in here watching us do this, which was great. Love to do it live, love to do it in front of the people, but essentially here's what we're looking at. We're looking at dollar CAD short side. We're looking at selling on upticks into 37.37 with a stop just above 138, the figure. The stop was 38.11. We allowed that trade to work, something a lot of short-term focused people don't have the ability to do. They're in there for the fast buck, they're in there for the tick, and they'll end up basically churning it back and forth. You know, every once in a while they get it right, but more times than not, the retail aspect of it just gets chopped and hammered. And so what we're doing with this focus is really looking to partake in the swing direction of it. So we allowed this trade to work. And it never really put us in a lot of danger. But we accepted that, whatever that risk was, we accepted that risk up to 38.11. So we had about 70 points of damage control built in there. And now the model started to work for us. And so all of a sudden last night, that stop level, which was initially 38.11, has now moved itself all the way down to 36.88 in the money. So the worst this trade's going to do at this point is take about 50 ticks out of the market with the potential to take more. So that's something that's really interesting to focus on for more of a shorter term trader, to say, have access to this model. Know that the overall bias direction is for a stronger Canadian dollar, a weaker US dollar, and to look to sell upticks into dollar CAD. And so when you get the resulting like this, you get that outsized reward versus what you have to risk. Another trade that we put on, this was E-minis. E-minis actually got hit live in the room as we were doing it. It was filled at 23.95 2 days ago, and it got very close to stopping us out. I was getting people that were actually writing me and were not very happy with the E-mini movement higher, as if I could control it. But here's where E-minis entered short. It entered it at 23.95 on the 15th of May, and it traded above there. It traded above 2,400. Didn't close above there. Traded above there again yesterday, 2,400. That's where one of my subscribers sent me a note telling me that it wasn't a very good trade. The E-mini risk was capped at 24.07. So we were risking 12 points in E-minis on this daily model. Still pretty tight. One contract, it's about $600 US with commission, in addition to whatever your commission is. So it's 12 S&P points. Look at the rotation today. Didn't work day one, didn't work day two. Look at day number 3. So again, this daily model that's coming out and saying, I'm going to time the market. I'm calling for a downtrend. This is what that market looked like when that model signal was initiated. That's what the model looked like. That's what the market looked like. There was your sell signal, 23.95. Stop was 24.07. Look at the resulting action. Looks a lot different today, doesn't it? And there's no guarantee what the stop becomes tonight, but at 5 o'clock tonight when we run the model, that stop is likely to start to work itself lower so that there's not that same 12 points of risk. Maybe the stop gets in the money, maybe it doesn't. We'll have to see what the model updates tonight in terms of its stop level. But the approach is still the same, which is I want to be focused short side E-minis. I want to sell them on rallies. Now I'm going to use these levels to work for me. So I hope you guys join us. I hope that you take a look at it. If you have any questions, feel free to send an email. Check out the daily model. I wish you guys a good rest of the week and good trades, and we'll talk to you soon. Cheers.